morning, ladies and gentlemen. The time is 10:56, and today is an expiry. Today is the weekly expiry, and then we have a bunch of off days. So tomorrow, day after, we have four-day weekend this time. And basically, I'm not trading. It's been a while. I can't remember the last time I decided not to trade an expiry. It's happened before, but I just don't remember. Probably not in the past, maybe once in the past 2 to 3 years. And today is one of those days. So basically, idea yesterday itself was that what I felt is that the realized, so this was yesterday, the realized volatility is not particularly down, whereas there has been this steady crush in implied volatility. And the premiums at which yesterday itself spreads were closing, I would think twice before entering that. I mean, I would probably trade it if we open at the same premium. My idea yesterday was, look, if we open with some kind of an IV spike because of a big gap down or a big gap up into which puts don't get instantly crushed at the open, then it's worth trading. But let me just tell you what I mean. Yesterday we closed here. The 17,500 straddle closed for around 115 rupees. 115 rupees. At the open, you have a gap up, right? And at the gap up, we open exactly at 17,600. 17,600 is trading for 75 rupees. So, literally from the previous day high to low is around 400 points. So, on Monday to Tuesday low is around 400 points. And on closing, you're saying that we are going to make a move of only 115 points. Actually, if you see right at the open, this has gone up till, let's say, almost 165. So that straddle price would have gone to 165, 30% gain between Wednesday and Thursday. Here it is opened at 75. It's opened at 75. From there, we have had a move upside for 65 points, and then downside, I mean, from the top, if you see, downside another 150 points. So how are you going to trade this? Like, you will manage for risk in either direction, and that cost of that adjustment, that management, that itself is just not going to make sense. At the same time, the person who says in lower IV environments the premiums will be lower, will you skip every day? No, I will wait for a period where the realized volatility and implied volatility, so the realized, pricing of options and how they're moving, and what they're priced at starts to match. Right now, I think there's a mismatch. This kind of realized volatility, 75 rupees premium opening, 17,600 straddle, right? And then making moves like this. See, it's not like you're trading the straddle, right? So regardless of what kind you're trading in, this is a context. This gives a reference that, okay, market is not pricing in much risk at all, actually. 75 points. And yeah, I mean, maybe let's say you were stopped out on the call, or you took risk off on the call here, or you moved up your puts here, immediately punished here. Now this has been what? It's not even 11 o'clock yet. So anyway, just not worth it in my opinion. I'm carrying some positional trades, most of them from yesterday to today. All of them are doing well. I've made one adjustment to my HDFC trade. I'll go over what that adjustment is. This is actually what the adjustment is. This is my entire trade looks like this on HDFC. What I wanted to, yeah, this is how the entire trade looks. What I did was, basically, on the downside, my break even was being breached. I had taken a bullish position on HDFC. This trade is actually making me a profit only. I had sold the 2500 iron fly, expecting us to pull back there. So from the beginning, I was very close to the lower break even. But now that we are going into the weekend, I don't want to carry such a position. Anything can happen. So what I've done, I have first of all eliminated my upside risk. I squared up my previous hedge of 2700 and purchased the 2600 for the hedge. So I've basically removed a lot of the upside risk. And here I have sold the 17,600 straddle in a 2:1 basis. On a put and call, it is two calls of 2400, sorry, two calls of 2400 sold, one put of 2400 sold, and the put hedge is at the same at 2300, and the call hedge is at 2600. So this is how my position looks. It's comfortable. I mean, going by the sizing, regardless of what happens, really, I will most probably come out of this trade in a profit. It's already in a profit, but I will make a profit on this trade. Apart from that, IV crash has happened across the bat, so rest of the trades are looking same. INFI will know what happens once the results come. This position is exactly the same. I have still about a good amount of space on the downside, so not very concerned. I explained the INFI initial trade, the adjustments made in yesterday's video, so that will act as a reference. ITC, which was initially losing me money, now there has been a cooling of IV, and the position is starting to give me a profit. So what was initially a loss on a covered call is now a profit on this ITC trade. And yeah, that's about it. Nothing else really. Everything more or less exactly the same. TCS continues to give an excellent profit. I think now this position is in 6% profit, and I'm going to continue to trail it for now. There's no reason. What I can do is maybe towards close, I'll see how things are looking. If we close at the lowest point of the day, then I'll bring in the hedges before carrying this. So that is, it depends really on where we close, how the market closes. And what else have we got? Yeah, that's about it. So that's all of it. And you kind of have to keep in mind, you need to always look at, is it worth doing something or not? For 75 rupees at the money straddle, so you can only think what kind of stupid strangle prices you're getting. Market will move up, you'll be forced to react to the market. It's not like you're sitting there taking a trade praying that it goes right. So I mean, unless that is the trading system where you take a trade, you have a stop loss, and that's kind of how it works. Okay, that's fine. But yeah, for me, it just doesn't make sense, and it's one of those days where I'm happy to sit out, which is why in the morning itself, for a long time, it's a long time, said not worth it. I'm not going to force myself to trade when it just does not make sense to me. Anyway, thank you for watching. Have an excellent weekend, and I will catch you next week. Take care. Bye bye.